Hi and welcome back to Cheeky Crypto. My name is Nick, and today guys we're going to be jumping down into the world of Bitcoin, taking a look at what's been going on most recently and what I would expect to happen next. As I get into this video, if you find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, why not go ahead and subscribe, tap the bell, select all notifications, and in doing so you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, links in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out today. And if you are looking for a little bit more from the crypto space, why not check out the Patreon services in the description down below. We do cover a lot more for our Patreon members in Discord, so why not check that out if that's your bag. Okay, let's waste no more time. Let's jump right down into this. Right, so this is our Bitstamp data. This is basically Bitcoin paired up with USD and the weekly chart, right? And I'm going to start here because it gives us a big macro view over what's been going on, and why I think we're incredibly close, if not already hit the bottom for this corrective move. So originally my forecast was about 22,967, I believe. We have obviously come down a little bit lower than that, and I'll go through that in a moment on the smaller time frame. So you can see that this bear market bottom, well, it's estimating out here about $23,000. Now the reason for this is there's basically several different indicators. I've spoken about this quite a few times. So we're going to start things off with a simple 200 moving average. As you can see, historically speaking, we've come to this 200 SMA line, and we've bounced from it during these bear market lows. We did come down briefly, a little bit lower than this line during the pandemic crash of March 2020, and in theory, technically a little bit lower in January of 2015. So we have actually just come down ever so slightly lower. Okay, obviously we haven't closed below this 200 SMA yet. But basically we've just come down touching this line ever so slightly lower than this line as well. So right now this is actually a really good indication of being incredibly close to the bottom, right? And I was talking about this a few days ago. Dollar cost averaging around here just seems to make the most amount of sense. It's going to be a fantastic area that many of these altcoins are less than 90% of their previous all-time highs, and as long as you do plenty of research into the projects that you think have longevity to them and etc., it seems to be a good place to start thinking about dollar cost averaging. But do remember, I am not a financial advisor. I cannot give you financial advice. All I'm doing is giving you my thoughts and opinions on the data in the charts as I see it. And this 200 SMA gives us a pretty good representation as to good areas of support to be found and where the bottom of this bear market is going to be. We obviously have the EMAs, the same concept again. You're closing below the 20, you're going to move down. And if I actually bring this up here for a second, you can kind of see the yellow line here is our 20 EMA, and the blue line is our 50 EMA, with our 200 EMA being down here. And again, this is the line that we historically have to close below. So we've done that as well. So yeah, we're right into the kind of the nuts and the bolts of all of this now. And of course, the last thing to kind of take a look at is the Gaussian channel. The Gaussian channel has been historically a pretty accurate way of predicting where the value is going to be had in the bear market lows, basically indicating this section where it's gone red. Basically the last, well, it goes red, and then a few weeks later, you're kind of right at the very bottom. So we went red a couple weeks ago, and now we are right towards this bottom area. So I think there's a little bit more room to the downside, don't get me wrong, but it's not exactly massive now, and I think that gap is closing significantly. So we should be starting to think, yeah, this is going to be the bottom. We've got the red on the Gaussian channel as we had previously in the last two bear market low structures, and obviously coupled this with plenty of other things such as our Gaussian channel, the 200 SMA, the EMAs, and of course Elliott wave theory, all predicting out these kind of low areas. So we're hoping that it doesn't cross the 2017 all-time high, but again, that would be something that would be new for Bitcoin history, where it's never actually gone down lower than the previous all-time high. But it's possible. We didn't exactly have a fantastic run with Bitcoin. It only hit $69,000, and 2,000% in gains is very, very insignificant in comparison. So for it to pull back down lower than the previous all-time high, it will be the first time in history it's done that, but it would make sense that it could do that based on the fact that the gains were very, very small. So again, we're just going to be really paying attention to this area. There's a lot of buying pressure to be had down here as well, anywhere between $22,000 and $20,000. But again, you know, as the price comes back down, that buying pressure will considerably increase. But it'll be interesting to kind of see where this thing goes. Many altcoins are holding out right now, but I do expect those to also pull back as well. Okay, so that's kind of the macro view, right? So we have a good idea that the lows are coming on in here. I'm just going to adjust this at 20k for now. But basically, yeah, that's kind of what we're looking at on the macro. Let's jump on down now into our Binance data, and we'll take a look at things on the hourly chart. Okay, because this is really where we can see some of the progress that's being made here. So we have this really deep and really steep third wave, right? It's an overextended one, if you will. Basically, here we have 1, 2, we come down for 3, 4, and finally 5. Now we're bouncing up into this fourth wave here. Now, the problem with this is we don't really have a good, accurate way of predicting out where this is likely to go just yet. We can use some standard kind of practices where we say, okay, well, it should be approximately the 618 of this move, or the 382. So it put us at approximately this area here, which would be about $24,500, and then we pull back down. So, you know, there's an estimate there, but the market isn't exactly being very predictable at the moment. It's definitely got a lot of fear in the space, so we should be very, very cautious. But if we do move up to about $24,500, it would actually indicate to us moving down to 20, or well, anywhere really between $19,000 and $20,000. I think personally we'll probably hit this $20,000 level, and the buying pressure will just be absolutely insane, as people have been predicting $20,000 for a very, very, very long time, way back in 2021. So, you know, I think a lot of people will be thrilled to see this gap finally be getting filled. But yeah, essentially that could be where we find ourselves at the bottom. Originally, obviously, I was talking about the 22,967, and of course this little refined area between 23.6 and 25.5. I'm going to remove those because they're now done and void. I'm going to remove this fib, and I'm going to remove this one as well. Okay, now this is important because it is a 1-to-1 ratio on a larger macro. So if I come and bring this down, you can see here that this is a bigger ABC structure. Now we've just overextended this a little bit. We can obviously see where this is going. So let's go ahead and actually just grab hold of the top there, move this over to here. And you could actually argue that we're going to come down to a 1.236, which would put us pretty much on top of that 19,900 level. So it'd be interesting to kind of see if we actually do find that $20,000 support there, in line with the 1.236, as we kind of finishing off this last little move here, this last fifth wave down. So yeah, it'll be interesting to kind of see how that plays out. But for the most part, yeah, we're right on top of it all now. So obviously timing the market, timing the bottom is going to be incredibly difficult. So as I said, dollar cost averaging all around in this low of the fifth wave just makes a lot of sense, right? So as we kind of look at this, we had that overextended third wave, which means that we are probably actually going to have something that will make a lot more sense if it is just the same as wave 1 over this side here. So if wave 3 is usually overextended, then usually wave 5 and wave 1 are 1-to-1. However, we haven't had wave 4, so we don't know how high this thing's going to go just yet as to being able to predict out how low our wave 1 is going to go. So we should be a little bit cautious, but as I said, dollar cost averaging all around here, it does make a lot of sense in my personal opinion. Guys, I'm going to leave the video there. If you have found this useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. With all that said, done, and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.